So welcome back to the channel.
Welcome.
I'm Chima.
I'm Obina.
And we're the Seeker Bros.
Yes, we are. This channel is all about business, finance, and wealth building. So today we're going to be talking to you about why you should probably invest now. Now's a good time. You think now's a good time? I think now's pretty good. So with the recent outbreak of Covid-19, aka the coronavirus, we have seen markets across the world tumble lower and lower.
But before we begin, let me just say this. There's actually a lot of advice out there that suggests that you should probably do nothing. That's generally the case if you're holding stocks and you're thinking about selling them, or you just have no idea what you're doing. But right now, there are some incentives to buying now.
We have seen the S&P 500 and Dow Jones index fall. This sell-off carries into Asia Pacific, where we see Australia's S&P fell 3.6%, Japan's Nikkei 225 fell 2.27%, China's Shanghai Composite fell 1.34%. You think it's too early for Corona jokes?
Nah. Now, in case you thought the coronavirus wasn't a serious impact to the economy, keep this in mind. An alarming 938 of the Fortune 1000 companies had one or more Tier 2 suppliers in impacted regions of China.
Also, on March 9th of this year, we saw the biggest drop in the U.S. stock market since the 2008 recession.
In fact, Monday, March 9th was so bad it actually triggered a halt of trading for the U.S. stock market. That's actually called the circuit breaker, in which the stock prices are prevented from falling through the floor.
Oil prices crashed the most we've seen since 1991, after Saudi Arabia launches a price war against Russia. Now you may ask yourself, what does this all mean? What should I do? What does the future of the world economy hold? Have we ever seen anything like this before? This is actually the curse of interconnectivity.
Globalism.
The world's global market are all really connected.
Now, if you don't think the coronavirus is that big of a deal, stocks have entered into what is called a bear market. Now, to be clear, a bear market is bad, especially when you compare it to the bull market, which means good, that we've been experiencing for a record-breaking 11 years. And in the age of social media, this has largely exacerbated the effects of the coronavirus and its concerns, thus making this decline even more serious. In a bear market, people usually panic sell, which dramatically brings down the stock price.
The coronavirus concerns have indeed created a very interesting buying opportunity right now.
Yep, everything is for sale basically. Now don't get too alarmed, let's look at the numbers. Between the Dow Jones and the S&P 500, there's been an upward trend for the last 100 years. Now to put things into perspective, the market has gone up for over 70% of those years. If you take the average of all the high and low years, that's still a historical market return of 10%.
Now, based on the numbers, we can see that an investment in the overall stock market is probably a good investment. You can actually invest into the overall stock market by buying a total market ETF, which essentially represents the entire market when you buy into it. Interesting backstory. In 2008, Warren Buffett issued a challenge to the hedge fund industry, which in his views charged really high fees that the fund's performance couldn't justify. Protege Partners LLC accepted, and the two parties placed $1 million bet. Yes, I just said $1 million bet. Buffett was essentially saying, including fees, costs, and expenses, an S&P 500 index fund would outperform a hand-picked portfolio of hedge funds over 10 years. The bet played two basic investing philosophies against each other: passive and active investing. You can take a guess who won that.
Now, before you go throwing your money into the market, keep in mind we're talking about the general trends of the Dow and the S&P 500, not individual stocks. Please remember, we are not financial advisors.
Don't sue me, bro.
You should only invest in individual stocks if you know what you're doing or you're knowledgeable about those specific companies. In general, the S&P is usually the safer way to go, and you can do this by investing in specific ETFs. So there you have it, guys. These are the reasons you probably should consider investing now.
Everything is for sale.
Get it while you can. Now, if you're new to investing at all, or you're just trying to look for a way to just start, Robinhood is a great platform. And if you click the link in the description down below, you'll actually get one free stock from Robinhood.
Also, Robinhood doesn't charge any fees for buying or selling stocks, so take advantage of that.
Link is in the description down below. Now, before you start investing using the Robinhood link down below, of course, we're actually going to make a video about what questions you should ask yourself before you start investing. So stay tuned. So once again, I'm Chima.
I'm Obina.
And we're the Seeker Bros.
This channel is all about business, finance, and wealth building. If you like that, give us a like and subscribe.
Share with your friends.
Yeah, we like shares.